Something big just changed Palantir's story today. Palantir's next price might have been leaked today. No one really expected this. But here's the crazy part. One analyst pointed something out. Alex Karp and the developers might push something game-changing for Palantir. Is this the start of the dream rally for Palantir? Or is this something else? And why am I being so excited? Well, let me explain. Disclaimer. Palantir had a bit of a shake-up today. It dipped for a moment, caught some people off guard, but it didn't take long before it started climbing back up. It wasn't one of those dramatic plunges. It was more like a quick reset before pushing forward again. And here's where it gets really interesting. Even with that little hiccup, if you zoom out and look at the bigger picture, the stock is still riding high. Over the past week, it's been strong, gaining solid ground and keeping that momentum alive. What's even more impressive is the energy in the community. Investors aren't shaken, they're fired up. Confidence is running high because Palantir keeps proving itself as a powerhouse. People know what this company is capable of, and they see the long game. It's not just about a single day's movement. It's about the bigger trend, and that trend is pointing up. Every time Palantir faces a small pullback, it's met with even more buying pressure. That kind of resilience speaks volumes. The stock isn't just surviving these dips, it's using them as fuel. And here's the thing. One analyst took a close look at Palantir's chart and pointed out something interesting. He wasn't too thrilled about how today's candle closed under a key moving average, saying it's not the best look in the short term. But at the same time, the overall flow of money into the stock was leaning bullish, which shows there's still plenty of confidence. And here's where it gets even more intriguing. There's a strong trend line just a bit lower, acting as support. If Palantir drifts down a little more, it could actually set up a great buying opportunity for those looking to jump in at a solid level. Stochastics are starting to shift, hinting that there might be a bit more room for a pullback, but nothing that changes the bigger picture. And wait, I know. That sounds crazy, but hear me out. Something huge just came to light today, and when you connect the dots with Palantir's recent moves, it starts to look like they're gearing up for something massive. We're talking about the kind of development that could send Palantir's price soaring to new levels. And here's what's even crazier. Wall Street might have leaked something massive for Palantir's next, and no one expected it. Now, I can't spill all the details just yet, but trust me, you're going to want to. I'll break it all down later in the video, so make sure you stick around until the end. But first, let's hear about this odd but actually insane move by Palantir recently. In a recent interview, CIO Jim Siders dropped a bombshell. Palantir cut down its IT team by a huge amount. But instead of struggling, it's actually growing faster and running smoother than ever. And this isn't just about saving money. It's a bold move that shows how Palantir does things. Rather than relying on a giant IT department, they've woven their own AI-powered foundry platform directly into their business. No more slow, outdated systems. Everything is now lean, connected, and way more efficient. It's a total shift in how a company can operate, and it fits right into Palantir's culture of questioning everything and breaking old systems that don't work anymore. Siders even mentioned that an MIT professor once suggested ditching IT departments completely, and Palantir did it. Now, decisions get made faster, teams work more smoothly, and the company isn't weighed down by the usual bloat. Most companies are still stuck in the past with oversized IT teams, but Palantir is proving that cutting the extra layers doesn't mean losing power. It means getting smarter, faster, and way more agile. And here's where it gets even more exciting. Palantir's business is booming, pulling in massive revenue and gaining serious traction in the commercial world. While other companies are scrambling to figure out how to adapt to AI, Palantir is already ahead of the game. And for investors, this is bigger than just a company running more efficiently. It's a preview of the future, where AI-powered businesses operate leaner, make more money, and open up entirely new opportunities. But here's something crazier. Wall Street just dropped a massive. Goldman Sachs reiterated its neutral rating on Palantir. But here's where it gets wild. They slapped an $80 price target on it. Yeah, $80. That's lower than where it's trading right now, which might make raise an eyebrow. But let's break this down because there's more to the story. Goldman's team recently visited Palantir's New York office, met with some top execs, and got an inside look at the company's AI advancements. They walked away impressed, especially with Palantir's ontology, a system that basically stitches together messy, scattered data and turns it into something useful for decision-making. That's a huge deal for AI adoption because raw data alone is useless if companies can't actually apply it in situations. And Palantir has been ahead of the game on this for years. So why the neutral rating? Goldman says they're not sure how easy it'll be for businesses to build custom AI workflows in the future. And they're comparing Palantir's valuation to other software companies growing at a similar pace. Here's what they're missing. Palantir isn't just another software company. It's an AI powerhouse that's proving it can deliver real results fast, and enterprises are starting to realize that. Now let's talk about the stock. Palantir is trading above that $80 target, and that's a bullish sign. Why? Because the market clearly sees more potential than what Goldman is suggesting. Analysts set targets based on models, but price action tells the real story. And right now, investors aren't buying the idea that they're worth less. The demand is strong, and the long-term vision is what's driving it higher. So, despite the neutral rating, this Palantir. Wall Street is acknowledging its edge in AI. Businesses are catching on, and the stock is holding strong above their target. That's not a sign of weakness. That's proof that Palantir is ahead of the curve, and the market knows it. And here's the exciting part. When you look at the bigger picture, none of this short-term noise really matters. Palantir is constantly building, and that's what true higher over time. One analyst just broke down something insane about Palantir's recent partnerships and advancements. And it's all starting to make sense now. Palantir isn't just landing deals. It's planting its AI-powered flag in every major industry you can think of. Defense, healthcare, aviation, utilities, it's everywhere. And these aren't just small side projects. These are deep integration of entire industries. In defense, Palantir is helping with real-time data processing for military operations. In utilities, it's cutting through outdated processes to make things more efficient. Healthcare? It's speeding up drug trials. Aviation? It's streamlining production for futuristic aircraft. And with a heavyweight like Databricks, it's expanding AI adoption across even more sectors. But what does all this mean for the stock? It means Palantir isn't just another AI company. It's becoming the backbone of critical industries. These partnerships aren't just about landing new clients. They lock Palantir into long-term, high-value contracts that keep revenue flowing for years. Here's where it gets really crazy. Analysts have been throwing around the idea that Palantir could hit $250 in the future. At first, that might have sounded wild. But when you put everything together, it's not just possible. It's starting to look inevitable. If Palantir keeps locking in deals like these, expanding its AI influence, and embedding itself deeper into major industries, that kind of price target doesn't just seem realistic. It seems like the natural next step. And if that happens, the impact on others? Massive. And looking at the long-term price, there's really no need to stress. One in and made a solid point. Palantir haters might want to take a step back. The stock is sitting around $90, up a huge amount this year. And if you zoom out, the gains over the 5 years have been absolutely massive. Sure, short-term volatility is part of the ride. Palantir isn't one of those slow-moving, boring stocks. It moves fast. Sometimes that means sharp drops. But here's the thing. It always rewards long-term investors. That's just how the market works with great businesses, and Palantir is one of the best out there. At the end of the day, this is a company that keeps delivering. It's locking in major deals, expanding its AI reach across industry, and proving that it's built for the future. That's why the stock keeps climbing, and it's why investors who hold on through the noise end up winning big. So while some people stress over the dips, smart money knows the real play. Palantir long-term machine, and the market knows it. But what is your opinion on this? Comment down below. If you are curious to find more, then be sure to click on one of the videos you see on the screen. We come to the end of this video.
When we talk about Coinbase, we know that things are serious. The crypto market now is crazy. This is a massive tug of war between bulls and bears. The Ethereum ETF was just approved. And the timing couldn't be worse. Shiba Inu investors ring alarm because things are wild. They panic, and it seems that there is only one way to save your investments. But what is it about? Well, let me explain. Disclaimer. Recently, Shiba Inu's price performance has been anything but bullish. The asset has struggled significantly, failing to hold its ground above the local support level. This downturn is underscored by the exodus of whales, signaling that the market isn't ready for a growth phase just yet. This is devastating news for the Shiba Inu community, which has been hopeful for a turnaround. Adding to the complexity of the situation, we recently saw the approval of an Ethereum ETF sparking immense excitement across the crypto market. This enthusiasm was well-founded, as the ETF's approval marked a significant milestone. The Ethereum ETF is now in the market for the first time. Surprisingly, this surge in interest spilled over to Shiba Inu, with whales suddenly showing renewed interest and attempting to push its price higher. However, despite this temporary boost, Shiba Inu has struggled to maintain momentum, highlighting the challenges it faces in the current market landscape. Shiba Inu has recently succumbed to strong selling pressure, pushing its price below crucial support areas. This decline shows how it failed to maintain its position above a key threshold. At the same time, there has been a noticeable drop in large transactions, indicating a decrease in activity from major holders. This combination of factors paints a challenging picture for Shiba Inu's market presence. For instance, there were 341 large transactions over the past week, but only 82 in the last 24 hours. This sharp drop suggests that big holders, or whales, are reducing their positions, weakening the buying pressure needed to sustain higher prices. While 82 large transactions isn't zero, it's still 4 times less than what we saw at the peak. This decrease is quite noticeable. It's like going from seeing a bustling street filled with people to one with just a small crowd. The difference is significant and hard to ignore. At the same time, the volume of large transactions in the past 24 hours was 3.36 trillion Shiba Inu, compared to a peak of 5.7 trillion Shiba Inu over the past week. This indicates a slight relief in the activity of big holders, but it still suggests ongoing bearishness. This is quite an interesting development. Just 2 days ago, the Ethereum ETF was approved, which should have sparked excitement in the market. So, where is that excitement now? Why did Shiba Inu's price plummet so suddenly despite this positive news? It's a puzzling turn of events. But hey, here's some good explanation of what's happening now and what to expect next. Even though Ethereum ETFs were approved, trading hasn't started yet. This process involves several steps, including setting up the ETF, ensuring regulatory compliance, and preparing the market infrastructure for trading. Until these preparations are complete and trading officially begins, the full impact of the ETF approval won't be felt in the market. This might explain why the excitement hasn't translated into immediate positive price action for Shiba Inu. Well, this is what many people were thinking. But there's something very important they seem to not understand. Do you remember Grayscale? They were the ones dumping hundreds of millions of dollars worth of Bitcoin. And they were the ones who were the ones. ETF was approved, causing multiple market crashes. Here's some analysis. Grayscale investors could buy Bitcoin at a discounted price, with the discount hovering around 48% in early 2023. This significant discount led many investors to sell their Bitcoin as soon as Grayscale's Bitcoin was converted into an ETF. But with the Ethereum ETF, investors were able to buy Ethereum at an even bigger discount, which was almost 60% in early 2023. Given this substantial discount, many Ethereum ETF investors are likely to sell and take profits once ETF trading goes live. The reason is straightforward. Buying at a discount means they can sell at market value and lock in considerable gains, making it a highly attractive option for them. So, this might mean that the whales are currently hesitant to invest. because they anticipate prices will drop further. And that is just the tip of the iceberg. We already have Bitcoin and Ethereum ETFs trading in Hong Kong, and we can see the difference in flows there. This approach is smart because it allows us to analyze existing data to predict future trends. So far, Hong Kong Bitcoin ETFs have seen total inflows of $105 million, while Ethereum ETFs have only seen $17 million in total inflows.